1.6 trillion US dollars. Just have a think about how much money that is. To explain it better, that is 160 million millions. If you combine Tesla, Visa, and Walmart's total stock value, you're still not at $1.6 trillion. This number is the current total value of the Norwegian Sovereign Wealth Fund, or locally called the Oil Fund. It has the power to tank entire economies, and by far and large is Norway's greatest, both soft and hard power asset. Did you ever go shopping on Oxford or Regent Street in London, or walk down Wall Street in New York? You've likely passed real estate owned by Norway's oil fund. In fact, Norway owns a staggering 25% of all the real estate on Regent Street and entire skyscrapers in New York. Why, you may ask? We'll talk about the reasons in this video. It might surprise you. Before we move on, I'd love if you could hit the like button if you like this video, as it helps our relative small channel compete in a sea of much larger fish. Not only is the fund totally transparent in what it does and where it invests, it also actively divests from causes such as nuclear arms production, tobacco manufacture, environmentally dangerous companies, and entire countries that Norway feels break international law. As we discussed before on my channel, Norway produces some quite high-tech military weaponry and equipment, but it all pales in comparison to the oil fund. But first, some history. The journey began in the late 1960s when significant oil and gas reserves were discovered in the North Sea. This discovery positioned Norway as a major player in the global energy market. The newfound wealth from petroleum extraction presented both opportunities and challenges for the small Scandinavian country. In the early years, Norway's government focused on developing the infrastructure needed to extract and export oil efficiently. However, there was a growing awareness of the potential economic pitfalls of relying heavily on volatile oil revenues. Lessons from other oil-rich countries, where sudden wealth had led to economic instability and corruption, underscored the need for prudent management. Norway's social democratic government, and in particular Prime Minister Einar Gerhardsen, wanted to avoid what was described as Dutch disease at all costs. Gerhardsen and his government didn't just let any company come in and search for oil, and companies had to pay extremely high taxes on profit, something which remains in play today. Rather quickly, American and international oil companies were outcompeted by the Norwegian state oil company called Statoil. Statoil proved to be more efficient, treated their workers better, and as they were state-owned, followed Norway's strict rules to a T. Norway's long tradition of seafaring and maritime economic activity helped ease the transition into this new industry. Even if the oil adventure started in 1969, Norway didn't actually start their infamous oil fund until 1990. And the fund didn't receive any notable cash injection until 1996. Some researchers credit this long period of thinking with essentially both sides of the political spectrum having been in power and adding to the policy as one of the reasons for its meteoric success. So how does Norway invest their money? Early on, Norway fell for the trap of investing heavily into government bonds, something which is fairly common when large funds have a large amount of cash on their hands. Just a year later, they changed course and diversified heavily into equity. It didn't take long before the fund diversified into emerging markets and shares in companies across the globe, which is the reason for much of the wealth of the fund today. But the fund can't just invest anywhere it wants. The Norwegian government and parliament have set strict rules for what sort of industry categories the fund can invest in. Effectively, this means that the fund does not invest in companies in industries such as nuclear or cluster arms production, companies that cause damage to the environment, or companies with issues with accountability, human rights, or corruption. The scope of the fund is to reduce the impact the Norwegian oil industry has on the world, which is why these strict rules are applied to the investment of profits. When the 2008 financial crash rolled around, the fund had seen a steady increase in value for many years, but pretty much overnight, 23% of the fund's value was lost. While this would likely scare most investors, Norway doubled down and increased its portfolio while the market was low. In 2008, the investment in stocks went up to 60%, and they also added a 5% allocation to real estate. In 2008 alone, Norway is credited to have bought stocks, which helped boost the fund by a mind-boggling 25% value in 2009. Since the 2008 crash, the fund sees an annual return rate of about 6%. Just to put this into perspective, 6% of 1.6 trillion US dollars is 96 billion. 96 billion US dollars is more than the total annual GDP of countries like Croatia, Bulgaria, and Jordan. What's the use of the fund if you can't use the money, you may ask? Well, Norway can and does use a small part of its returns every year. Norway withdraws around 3% per year, which correlates well with the rule of 4% withdrawals, leading to the owner of a fund never running out of money. A sound policy in order to keep inflation low. Norway's finance ministry estimates that the fund could be worth as much as $3 trillion in 2030 if the economy remains stable, which would make it about the same value as Microsoft or Apple, and mean that Norway would own something like 3% of the total value of all stocks in the world. It would also mean that the fund has a total value of over $1 million per citizen in Norway. The ethics of the oil fund is being questioned by a lot of environmental agencies, as it takes advantage of oil and is essentially built on a dirty foundation. While that is true, Norway produces the cleanest gas and oil products in the world. And the reality is that if Norway stopped, whoever filled the gap would produce oil with much heavier emissions to cover the hole that Norway would leave. And therein lies the whole point of this video. While Norway might not be the strongest military in the world, have the most planes, tanks, or soldiers, and so on, it does have the largest sovereign wealth fund in the world. With it, they wield a frightening amount of power. 1.6 trillion in assets is about the same value as the total yearly GDP of Denmark, Sweden, Finland, and Norway combined, or larger than Mexico and Spain's GDP. GDP is obviously the total money made in an economy in a year before expenses, while the Norwegian oil fund is purely money saved. An example of this power is how Norway can shape the policies of large companies by threatening to divest from them, have a vote in shareholder meetings, and generally use the power to control the policies of entire industrial fields. The standout example of this is how Norway have chosen to, or threatened to, divest from companies who damaged the Amazon rainforest. Earlier this year, the Wealth Fund scrutinized several South American companies who take part in damaging the Amazon, and the results were that their holdings in the area had to change their plans. In 2020, the fund decided to divest from Glencore for their impact on the environment, which immediately tanked their stocks to historic lows. A more famous example of this is how the fund did the same to Walmart in 2006 due to Walmart's stance on workers' rights. It took Walmart 12 years to redeem itself and have their divestment stopped, but only after improving workers' conditions, of course. It's a perfect example of how Norway can influence a company that has the same amount of people working for it as half of Norway's population. In other instances, the boss of Norway's oil fund has been to meetings with Tesla's board about Elon Musk's salary, being a large share owner in Tesla, and they've done the same with the vote on the Apple management team's bonuses, being the 8th largest investor in Apple. In short, this shows how powerful this oil fund is for Norway. It simply makes Norway punch well above its weight in all things politics. Before you go, I'd love to hear your feedback on this video. I make these videos for you, and I'm always looking to improve. I hope you enjoyed this video, and don't forget to hit that subscribe button for more videos like this one. Thank you.